Well, we were talking about chips, but we also have been watching the meme stocks very, very closely, of course. Joining us now is Ihor Dusaniwsky, S3 Partners Managing Director of Predictive Analytics. He also does a lot of research on short interest. Ihor, it's good to see you. So as we look at the meme stock activity that we've seen over the past few days, they happen to coincide with companies that have relatively high short interest. What do we know about the movement versus that short interest and the sort of relationship between the two?
Yeah, we'll see a much larger short interest percentage of float in some of these meme stocks and some of these smaller cap names, especially because there's not only institutional holders, but there's also a lot of retail holders in the name. You've got stock like AMC with 19% shortest percentage of float, to BBBY with 58% of the float, when the street average is really just 5.2%. So we're talking about multiples of what the street's average is.
Ihor, what do you think is triggering this latest move in the meme stocks? It kind of came out of the blue.
Yeah. I mean, Wall Street's gone to the Hamptons, but the meme stocks are back with a vengeance. We're seeing a lot of trading in these names. There really doesn't seem to be much fundamental reasons for this activity. I think it's a momentum type move where you start getting a little bit of move on the charts, and more people start following and jumping in. We are seeing short covering. There is a squeeze in name. These guys are in our squeeze score 100%, 100 out of 100 in our squeeze score. I mean, shorts have lost $1.7 billion in these three names just in August. Not a good August for the shorts.
So, Ihor, are we talking like what we saw in 2021 to the moon, or are we just talking suborbital space trip?
That might have been a once in a lifetime move, and with what we saw in the past. What we're seeing is just kind of reemergence of the meme stocks on different time periods where you've got this retail base that's moving the stock up. Institutions are long and short the name, so we see longs in the hedge fund community as well. But when you've got this kind of trading volume and you see shorts coming in and out of the market, you've got the price moves up.
Ihor, have we seen sort of a spillover effect, a broadening, if you will, of retail interest in other stocks as well because of the spike in retail interest? Like, does trading volume overall in other names tend to go up as well when you see this kind of activity?
Yeah, absolutely. I think what we see is names that are popular, stocks like Coinbase, MSTR, Carvana, Beyond Meat, get the interest of the retail side, and these are big shorts. So what you've got is a bunch of institutional guys that are short the stock, seeing this big blip up. The people with less conviction on the institutional side start getting out of these stocks, causes a lot of volatility in price, which emboldens more retail buying in the name.
How's Tesla holding up, Ihor?
Tesla, it's the granddaddy of meme stocks. Shorts are up for the year. They've still up for August because the price moves have recently gone down. But the guys, Tesla shorts lost $150 million yesterday. So they're taking some pain along with the meme stocks.
The king meme stock. Ihor Dusaniwsky, always good to see you. S3 Partners Managing Director of Predictive Analytics. We'll talk to you soon.
Thank you for having me.